Okay, so hi everybody. I'm Katie Evans with the Living 48 Real Estate team and coming to you from our home office because we are still doing physical distancing. But wanted to introduce you guys to one of my favorite lenders. As you all know, I have just a very small handful of lenders that I refer out. They're my preferred lenders, and Marc Trejo with Sun American Mortgage just happens to be one of those. So I want to introduce you all to Marc Trejo today. So Marc, real quick, just by way of introduction, in full disclosure, I have to let you all know that Marc is actually my second cousin. Now, when I started working with Marc, I had no idea that he was my second cousin. And I kind of thought, well, there's not that many Trejos in the world, so maybe there's a connection there. But I wasn't going to actually find out until after I decided working with him if I liked him or not. And since he actually salvaged one of my deals and has done that a couple times for me now, I'm very proud to say that yes, he's an awesome lender, and yes, he is my second cousin. So I'll even claim him that way as well. So Marc, just to introduce yourself to everybody in my sphere, tell us a little bit about your family, where you grew up, why you're here in Arizona, all that kind of stuff. Just give us a little brief synopsis of you.
That was thanks for letting me join. That was a fun phone call that one night, where I get this random call from Katie and it's like, hey, are you related to so and so? And we had that conversation and figure out, connect the dots, so to speak. And so I am with Sun American Mortgage. We're a company that's been around for 35 years or so. I'm married to my wife Heidi, and we have three kids. A 17-year-old daughter, a 15-year-old son, and a 12-year-old son. And so we're kind of in that phase that everyone just kind of cringes when you hear it. And all the stereotypes are completely true. So
Teenage years are real, huh?
Yeah. I grew up, I've been in Arizona all my life. And so I grew up in Casa Grande, until I was 16, and my dad owned a wholesale and retail gasoline business, and they moved that business, the headquarters, up to Gilbert or up to Mesa, and our family moved to Gilbert when I was 16, and I finished off my last 2 years of high school at Highland High School, and that's where we graduated. And Heidi and I have been around, the Valley and Gilbert, East Mesa since then, and so it's been a good place, and being in the mortgage world and helping people find their own home is something that I've really enjoyed and kept me here and kept that foundation of Arizona being the place I want to be.
That's so awesome. That's so awesome. Well, thanks for that, Marc. So we're going to jump right in because I think that what we're going to talk about today is really timely and very, very important for both of our clients, specifically those that are looking to buy a house when this is all over, and even those maybe that are looking to do a refi, because we have had historically low interest rates over this last long time, and they're going to stay there, I think, for a little while. So we want to talk about the subject of forbearance. A lot of us are getting notifications from our banks that, hey, if you need to, you can put your car loan payments in forbearance, you can put your school loan payments in forbearance, you can put your house payments in forbearance, and there's programs, and we're being told that that's not going to affect our credit score, but I'm a little concerned about what it's going to mean on our credit reports coming out of all of this. And so if you would just take a couple of minutes to kind of explain the difference between forbearance and forgiveness, and if we choose to take that option of forbearance, what that's going to do to us and how it's going to affect us moving forward.
Sure. There's a couple different sides to forbearance. There's a reason that you mentioned that our lenders are reaching out to us to offer that option. There's a reason that's happening. It's because it ends up being a pretty good deal for them. If a lot of people come on forbearance because, if anything, it's more interest. They're accruing interest at a higher loan balance because that loan balance isn't being paid off during that forbearance period. You hit on it right on the head. You hit the nail on the head. Forbearance is not forgiveness. Forbearance is just deferring the payment to a later time. There's two things to really think about right now in terms of forbearance. For those that are purchasing or refinancing right now, and they're about to have their first payment come due, and then the rest, everyone else that's in the middle of their mortgage and they're just in the middle of their payments. The first one, if you're refinancing right now or you're purchasing right now and you haven't had your first payment yet, do not go into forbearance until that first payment is made. Because Fannie Mae and Freddie Mac, who kind of manage the guidelines for all the mortgage world, they carry all the weight. Their guidelines read that you could actually be put into default and you could be essentially committing mortgage fraud if you don't make that first payment. And what it does, it triggers a lot of bad things that can happen. Your loan isn't sellable on the secondary market, which with lenders today is huge, which is why everyone tries to get loans guaranteed by Fannie and Freddie, because they need that insurance for the secondary market. That's the biggest thing, and that will just create a nightmare for you and your lender. So do everything you can not to go into forbearance before that first payment is made. Make that first payment, and then if you need to go into forbearance, it's a lot easier and it's a better situation. For the rest of us that are in the middle of our mortgages and those types of things, you really have to be careful to go into forbearance, because you have to read the fine print. The servicers generally right now have an option, and that's to essentially move the payment that you're deferring, I'll use that term, to the end of the term. Just tack it on to the end of your mortgage. But a lot of them are choosing a different option, and the fine print is showing it, and that's at the end of the forbearance period, everything's due right then. A lot of servicers are doing that, where say you forbear your payment and defer your payment and the interest for 6 months. Well, at the end of that 6-month period, that entire payment is due. So if it's $1,000 a month and all that interest accrued during that 6 months, you could be stuck owing $10,000 after that 6-month period. So you really have to be careful when you go into forbearance and read the fine print that that's not what your servicer is doing, and that they're just tacking it on to the end of your term and extending the mortgage term. Instead of 360 months, it'll be 366.
Gotcha.
Or you need to watch and make sure that they're not just saying at the end of the 6-month period, we're going to collect the full amount, lump sum, those types of things. And if you don't have it, they'll default you, that'll hit your credit, all those types of things.
Gotcha.
And so that's the key thing outside of even the credit report. That's the key thing that you really want to pay attention to related to forbearance. Now to ultimately answer your question about the credit report, it's kind of unknown right now, which is scary to enter into a decision credit-wise that you really don't know how it's going to impact you. In the past, those things haven't been positive, and it's caused people and consumers to struggle to get a new mortgage when they have a modification or forbearance on the record, because they just flag them as a higher risk borrower and a higher risk client. And so it's something that you want to consider and be careful for.
Okay, so that would include things like if we decide to defer our car payments or anything like that, that's all going to show up eventually on that credit report, most likely. And even though it doesn't ding our credit score, there's still going to be something that says, hey, this person took a forbearance, or is it only while you're currently in the forbearance?
That's different for every bank. Just like every agency and every lender or bank or things like that report, credit card company that report to the credit. Some put it on there as a note, some don't. Some take it off, some don't. And so it ends up becoming a negotiation between you and that entity, as far as how it's going to show up on your credit. Generally, though, you'd be better off doing something like that on anything other than a mortgage. That's the biggest purchase our clients are making. That's the most money that you're trying to qualify for. Generally speaking, if you can enter into a forbearance on a credit card or car payment, you'd be better off than doing so on a mortgage, just because the numbers in and of itself.
Great. Okay, perfect. If they put something like a forbearance on your credit report, and let's say that you have stopped the forbearance now, but it's still showing up on your credit report, is there anything that we can do about that? How long do they generally stay on our reports? Or, you know, like what do we do to try and work around that once we come out of this and we decide we're ready to purchase a home or refinance at that point?
Generally speaking, it should, and this is something that changes all the time. There's not really a set guideline or set rule, and it's really agency specific. But generally speaking, it should only really show up while you're in the middle of it, you know, while you're in that forbearance. And you should be able to call, if it's showing up on your credit report and it's been a year or two since you've done it and you're no longer in forbearance, or you're not in forbearance period, or you never were, you should be able to call that company and ask them to remove that note. And so, because that's all it is, it's a note. It's not a status or anything like that. It's not a default status. There's no late payments. At least there shouldn't be. And if they report any, you can get it taken off. But that's the easiest route, is just call the company and ask them to remove it.
Perfect. Perfect. Well, Mark, I really appreciate you sharing your knowledge with us on this right now. Like I said, I know a lot of people are hearing a lot of information about this, and we don't really know what's happening or how it's going to affect us moving forward. So I think it's always great to go straight to the source. I always tell my clients, I don't want to be your mortgage expert. I'm working with those guys, and I want to be a real estate expert, and I will partner with those that are great mortgage lenders and brokers, and we'll let them be the experts. So I appreciate you being the expert today on all of this. So any last words that you would like to share with any of our clients about, you know, making sure that they're ready to come out of this with the best credit scores and the best everything possible, so that they can get on with life and get on with their plans as quickly as possible?
Honestly, I mean, I'm not a reinvent the wheel type of guy. And so the best way to come out of this in the best situation, and this isn't reality for everyone, I recognize that, but do everything you can just to bank your payments on time. And so you do that, you're able to do that, you plan ahead, and you're going to come out better than those that can't. And then, but at the same time, there are helps and there are checks that help those that really need it. And that's why the government issues a thing like forbearance. And if you have any questions on it, they're welcome to reach out to me, and I can help with that. But really just pay attention to the agreement they're entering into before they sign on the dotted line. And so just be careful.
Perfect. Perfect. So Mark, before I let you go, how can people get a hold of you directly if they have any questions? Of course, they can always come to me and I will shoo them right over in your direction. But if they want to just go straight to you, how can they get a hold of you? What's the best way to find you?
Sure. Thank you. My cell phone's the best. It's 602-743-4885. And that call or text, either one works, and I'd be happy to help.
Fantastic. Well, hey, Mark, thank you again so much for joining me on this call. I appreciate, you know, we had planned to do this earlier in the year. We were going to do it together, but here we are being physically distanced. And I appreciate you making the accommodations to do that. And so I really appreciate you doing this and always taking such great care of our mutual clients as well. So we'll thank everybody for watching today. Of course, if you have any questions, Mark told you how you can get a hold of him directly. You can always reach out to me as well. And my cell phone as well is 480-415-1341. If you ever lose Mark's information or you didn't write it down fast enough, he's actually one of the preferred lenders on our website. So feel free to go visit our website, and that is www.living48realestate.com. So again, www.living48realestate.com, and you'll find Mark and a bunch of other resources there to help you get started on your real estate journey and get a bunch of your questions answered. So again, Mark, thank you so much for joining us, and we will catch you on another one of these Mortgage Minutes, and hopefully next time we'll be able to be in person, but if not, at least we've got this way down as well.
Lily, thank you for the opportunity. I appreciate it. Anytime.